And we're live. Mic check, 1, 2. What is going on, guys and girls? Good morning, good evening, good afternoon. Welcome back to another weekly market review. We're fucking back. The cryptocurrency bull market is fucking back. I feel like a broken record because over the last 3 to 6 months, I've been talking about how trading conditions are not optimal right now, but when that turns around, it's going to turn around quickly, and it's a good idea to have your finger on the pulse. Well, it's finger on the fucking pulse time. We're going to get into it. Today, we're going to cover a few things. I want to talk about the cryptocurrency markets, the breakout, what I think it means from a higher time frame point of view. I also want to cover how I think the sentiment shift is going to work in crypto for this cycle, where I think that could perform well, and why I think that doesn't necessarily mean that we just have a blanket alt season. I wholeheartedly disagree with that. I'm not sure that's the case this cycle. Going to talk about a few trade setups, a few very clear signs of outperformance, which I was able to capitalize on over the last week. And yeah, it's fucking lock-in season. If you've been watching these market updates and you're trading crypto, and you're trying to trade crypto, it's concentrate season. It's get your fucking finger out season. So let's get into it. So in terms of news, quick rundown. Last week we had not much news last week. AUD unemployment second half of the week, FOMC, some CPI data. Not too much. Obviously, we had some pretty significant news from Trump last week, which we'll cover off in a minute. This week ahead, AUD CPI. If you live in Australia and you're interested in what's happening with the Australian economy, that is something to watch. Year-on-year CPI expected to come in at 3.3%, down 0.5% from the previous year. Any changes to that number are going to influence the Australian volatility. So let's see. PCE, second half of the week, Wednesday afternoon, and then Friday, Fed chair. That's probably going to influence the markets a little bit because it's going to give a little bit of an indication to A, the lead up to Jackson Hole, which is on the Saturday, but also B, the direction that the Fed is likely to go in. Markets are kind of pausing right now because based off the news that Trump came out last week, obviously he spoke about crypto, he spoke about Bitcoin, he spoke about hype, he spoke about adding crypto to the balance sheet. What he also spoke about was that the US government is buying back treasury bonds, long-dated bonds, which is interesting because them buying back bonds reduces the yield that the bonds return, and therefore investors look for other returning asset classes, e.g. real estate, e.g. the stock market, e.g. crypto, and I think a combination of Trump talking on Twitter and that rotational trade led to the short squeeze, which caused crypto to break out as much as it did. Now, one of the other factors that people want to see is what's going to happen with the direction of monetary policy. And that speech from Fed Chair Walsh, the new guy, that's going to be a leading indicator or potentially a guessing indicator as to what the Fed does next. So a couple of things on the cards this week, but ultimately, obviously, it doesn't override price action. So it's been a big week. It's been a big week for crypto. Let's start off from the top with the BTC chart. I've got a few things to cover this week, so let's get straight into it. Monthly, kind of no change. Still in a bearish higher time frame trend, which is good to bear in mind. I think crypto's back, but that monthly candle hasn't told us shit yet. So on a weekly time frame, you can see we swept these lows here. We've had almost, it's not closed yet, the largest weekly close in history coming up into this weekly 50 EMA and actually decelerating at it a little bit now. So to see a higher time frame structure shift, you need to see a higher high, and that includes breaking out above this swing high here. So in a dream scenario, you want to be seeing something along the lines of that. So I'm bullish crypto right now, but we are still in a weekly downtrend for now. Does that have the ability to change? Yes, but it hasn't changed yet. Weekly time frame, that's where we're at. Daily time frame, unbelievable. Huge amount of strength, a little bit of an inverse head and shoulders pattern, but it's not overly clean. It's messy and choppy. There's trigger number one. Trigger number two is the Saylor sells. That was when Saylor sold right there. You can see the bearish momentum carried us all the way down where we swept 59,900. So this is a significant level. Reclaiming the Saylor highs, reclaiming 74K, and then coming up as high as 79,500. We clipped into. it's pretty significant. Multiple higher time frame breakout levels have been breached. I would like to see a continuation here. Obviously, the major swing high is up here at 82, which is the weekly level that we just looked at there. So if you're looking for additional higher time frame confluence, it's right there. But from a daily levels point of view, BTC is now in a daily bullish trend, and we have broken out of significant levels. And this is the thing to remember, like with sentiment in crypto, you've got sailors selling. I'll pop an arrow on it here. You've got sailors selling right there. Well, that's a pretty negative confluence factor for the crypto markets in general. Mr. I'm never selling is selling BTC. That leads us to basically a cascade of a 20% retracement. We then swept those lows. What's interesting here is that Saylor actually spoke about selling more. So he sold barely any here. I forget the number, maybe 1700 BTC. It was quite a lot. It was 9 figures from memory. He sold 9 figures worth of BTC there. That's significant. Way more significant than that. But markets didn't really react to that. We sort of just chopped around here, swept this low, and then subsequently reclaimed it and chopped back into the range. So in terms of negative confluence factors and not FUD, but, industry influencing news, this is significant, but markets didn't really care. So when stuff like this happens, you're more inclined to think, okay, well, maybe we just chop around in this range. And then the longer we sit in here, you've got the Iran war, you've got Saylor selling 9 figures worth of BTC, you've got, basically every other asset class other than crypto outperforming it, and yet we still kind of chop sideways. So the longer we chop sideways for, the more inclined you are, or I am, to think that we're going to decelerate somewhere around here. We don't have confirmation of it until we break out there, but this deceleration is not bearish, it's deceleration. And the longer we chop around there for, the more likely we are to potentially make new highs. So this was kind of like the last, the last ditch effort to FUD the cryptocurrency markets, which obviously didn't work. So from a higher time frame daily point of view, it looks like we're back. Am I in any BTC positions right now? No. I can cover the 3 positions that I'm in a minute. But I was already in those trades. I took them as 4-hour breakout trades because they were clean. I had no idea this price action was going to occur. So I'm not going to sit here and say that I took BTC because I didn't. I was in 3 alts and they all absolutely sent it. But that was a little bit of luck attached to that. I took them as 4-hour breakout trades. I didn't think this would occur. But we're here now. So providing these higher time frame levels stay intact, we want to see these levels reclaimed and held. If we start to lose these levels and we start to make higher time frame lows and start to sell off, that is not good for the crypto market. So I would like to see these levels sustain. Let's see how we go tomorrow into the weekly close. ETH, where's it gone? ETH looked better than BTC, right? For a number of reasons. One, the higher time frame downtrend has broken out to the upside more significantly. So you've got this sort of zone, I guess, between sort of 2400. There's a lot of wicks into here, and this extreme wick here around 2460 region. So ETH has broken out of there. We've subsequently lost it and reclaimed back beneath it, which I don't love. But from a higher time frame point of view, the ETH level that's been broken is more significant than the BTC level that's been broken. I'm also not in any ETH positions right now, but I think if we do see better conditions in the crypto market and a continuation of this strength on the BTC chart, providing that ETH reclaims 2400 and hangs around above here, I think the ETH is the high beta trade to the cryptocurrency majors positioning right now. I think the ETH is the better option, but let's see. In terms of the 3 trades that I'm in a pump long from down here. No, I'm not. I'm in a pump long from here. I looked at that and thought that's a long time ago. I'm in a pump long from here. Cleanest 4-hour breakout I've taken in a long time. You can see we had this swing high here, which has basically been capping price since February. Breakout of that high, retest here, which is where my initial entry was. On the retest of those levels, we also had a gap fill there. There was a bunch of different confluence factors. TP all the way up at these highs. I am about 75% out of this position now, maybe even more, give or take, and stops are rolled in profits underneath the liquidation low from yesterday, which we can cover in a minute. And yeah, I'm just going to TP on the impulses. I had no idea this was going to do a 20R when I took this trade, but we're here now. So yeah, generational entry on pump, sort of by accident, but the setup was there. I just didn't think we'd push up as high as we did. Clean trade, clean break and retest. This is why it's important to not shy away from the outperformance, and that's one of the things I wanted to talk about today. So we've seen a lot of momentum in the crypto markets, but there has been some evidence of outperformance. In my opinion, the evidence of the outperformance is a good indication of where smart money is positioning assuming this is the next run, where smart money is positioning for the next run. They don't care about NFTs. They don't care about the culture. They don't care about any of this nonsense bullshit that you see on social media, which is basically just hype. As in not the token hype, as in hype. They care about revenue. They care about use case. They care about users. Pump Fund generates a shit ton of money from fees. Pump Fund, assuming we're in better market conditions, is about to skyrocket in terms of their volume. They're a profitable business in the traditional business setting. So projects like Pump Fund, they actually have a use case. They have usability. It's not hype. It's not just built on smoke and mirrors, like 99.9% of crypto projects. So tokens like Pump, tokens like Hype, tokens like Zcash even, they have a use case. Hype generates a shit ton of money in fees. As far as traditional business models go, Hype is an investable business because it generates, I think it was about 60 million a month last time I checked, 60 million a month in fees. They use the fees to do a buyback and burn. Cool. Decreasing supply, profitable business model, outperformance. And you've seen that become very evident in the charts over the last few days. This is my Hype trade. Basically the same setup. 4 hours grinding higher. I wanted to take the initial breakout here, which we didn't get. We then had another breakout there, which I took, and then I scaled in on the retest after this 4 hour bullish engulfing candle. TP up here, and I'm also about 75% out of this position. Stops rolled, and obviously now we are in all-time highs, which we can look at here on the daily time frame. It's important to realize that all-time high breakouts are significant. I think people think that all-time high breakouts are for TPing because we're expecting deceleration there. But if this is, in fact, the start of better conditions in the crypto market, then we're going to see much higher prices. And just because something is back at all-time highs, that doesn't mean where it tops out. You can see we had a wick close there, and then the following day was a bullish engulfing, and we haven't been back below it since. So I don't subscribe to the narrative that all-time high breakouts are for TPing into. I think they're for longing, personally. So yeah, Hype, clean trade, also gigantic risk to reward, which you won't see me LARP on about too often. But as I said, I just got lucky. I took 3 breakout trades and I got lucky. My third one was Link. I was in a Link. I was actually a little bit late to Link. I wanted to take Link as a breakout trade above. Where's it gone? I wanted to take Link as a breakout trade above here. Once we had this bullish momentum to the upside, I actually wanted to take this as a short-term trade up to these recent highs, but with this continuation and momentum, which is all the way back here now. I'll find it. This momentum breakout there. Once we had that impulsive move to the upside there, it cost me a little bit of risk to reward to get in a little bit late. We basically impulsed all the way up here. I moved my profit target up to this recent swing high there, TP'd some there, and again, I am about 75% out of this position. Link is actually my least favorite of the two. From a lower time frame point of view, it looks a bit toppy. The higher time frame levels, which I was reviewing when this loads, there's a higher time frame breakout there, which looks clean. However, if we lose this higher time frame level there, then I'm going to be cautious of this position playing out. And when we're putting in lower time frame reversal patterns, it's making me less confident in staying in this. But again, all of these, you can see this liquidation cascade here from yesterday. Basically, everyone and their mum, dog, pets, kids, wives, brother-in-laws, and sisters has been getting long crypto in the last few days. So we were due a liquidation flush, which we got yesterday lunchtime. Wiped out a bunch of longs. I'm pretty sure it was 130 billion from memory. You'll have to fact check me on it. Wiped out a bunch of leveraged longs, and some of these tokens have continued to the upside following the flush, which is a good sign of outperformance. E.g., there's the flush, bang into new highs, bang into new highs, flush again today, bang into new highs. That's outperformance from a revenue-driven project, which I believe will perform well this cycle. When we have liquidation flushes like that, you get to find out where the outperformance is, because the fastest ones to recover after the liquidation flushes is where smart money is flowing into. So, what have I got on the cards for this week? I want to see some higher time frame structures remain intact. I would like to see a continuation of BTC and ETH. I would like to see a continuation in the outperformance across a handful of projects that I've got my eye on. These are revenue-driven projects which actually have a use case beyond people talking shit about how good they are on Twitter with no real utility, and that's my focus. If this is indeed the beginning of a prosperous time in the crypto markets, which I believe it is a time to concentrate. It is not a time to be messing about. It's a time to concentrate. It's a time to get your finger out. It's a time to figure out what your trade plan is, figure out how you're going to manage these positions. Are you going to trade futures? Are you going to leverage? Are you going to buy spot? If you're going to trade this market, you need a plan. And if you don't have a plan, you are going to get eaten alive, because realistically, there's free money on the floor in crypto for probably a total of 3 to 6 months every 3 or 4 years. And if this is the beginning of one of those periods now, this is where you make all your money, and then you do fuck all for the preceding 1 to 2 years after that. So if this is that time, it's a good time to concentrate, figure out what your plan is, get some clearly defined set of rules. If you do not have a trading plan, and if you do not have a clearly defined set of rules, then get one. And if you don't know where to get one, that's something we'll be able to help with. Inside QT, we have obviously our membership model with all the webinars. There's 5 of them every week. But the secondary part is building people's trading plans, auditing their performance, consulting them on how to turn themselves into a profitable trader. So if you're watching this and you're not profitable yet, and you've been trading for any longer than about 6 to 12 months and you haven't worked it out yet, then it's about time you did something different. And if you want help doing that, the links will be down here somewhere or up there somewhere, depending on where I put the video. And that's it. Lock the fuck in, guys and gals. Have a wonderful week ahead. Happy trading. Let's fucking crush it.